Thank you for tuning in to another edition of the Vulcan Report. This end of day report is for trading on Tuesday, February the 6th, 2018. All right, so basically, what do we have here? We have a chart of the Dow futures. As you can see on the weekly chart, the market has recovered substantially and has raced back above the primary trend line support of 24,414. You can see it just nipped this trend line here. And basically, the market is behaving exactly the way I told you it would last night, if you recall last night's video. If you look at the daily chart of the Dow futures, let's go ahead and pull that up. All right, what do you got? This bar looks exactly like the bar that I showed you in last night's video. Does it not? If you go and look at the video that I posted, you'll see for yourself that the bar is doing exactly as I told you it would. All right, plain and simple. All right, and actually, it wasn't last night. It was, well, yeah, I guess it was, yeah, because I posted it in the evening. So if you are not, if you don't remember or you didn't watch it, it's video 455. All right, video number 455. I went into a lot of details as to what's what. All right, it was before this bar existed. All right, this is today's bar. This bar wasn't here. The only thing you had was this bar. And I told you what the market was going to do, and this is all we had. I said, this is what it's going to look like. Do you remember what else I told you about the bar? I showed you what the secondary bar was going to be, and I showed you a recovery, a rebound. And that's what's happening because you got mad rampage coming up here. All right. So market's doing exactly as you would expect on the daily chart. All right. Just wanted to point that out to you. All right. I did find out earlier during the day that the XIV was not a reverse split, but they're doing away with it. Credit Suisse is getting rid of it. This right here is straight up criminal. No prior warning or anything. Market closes at $99 and reopens down here, hitting $5.50. Come on, man, this is crazy. All right, so this is just decimating accounts all over the world. The XIV is widely held primarily in a lot of pension funds, investment funds, and funds of funds, and your 401k, the whole nine. Massive carnage and face rippage. This is just devastating. If you take a look at the TVIX, which is its sister, to my understanding, the TVIX is not necessarily going anywhere. I mean, you would think they would do away with this one too, but to my remembrance, it's just the XIV that's on the chopping block. I think it goes away like February the 20th or something like that. But if you look at the ProShares UVXY and SVXY, they're not going anywhere. All right, they're still here and ready to stay. Look how the market gave all that back. Gave it all back. And really, it punched you in the face in the overnight markets and the extended hours trading, overnight trading, pre-market. Because it ran up and you was like, oh, right, this is dope. And then, you had your continuation, then your quick reversal. All right. Reversed all of its rally. That's why these inverse ETFs straight up suck, because it really didn't give you an opportunity to really catch anything. It reversed just as quickly as it went up. So you didn't get a really chance to make any money off the sell-off per se. If you were an equities trader and just looking to get long the inverse ETFs. Enter SVXY. SVXY got smoked just like its counterpart, the XIV. It closed at $71.82, only to come down here, and it opened this morning at $11.70. Just total face rippage carnage. Anyone who was holding this is experiencing a tremendous amount of pain, but look on the bright side, this one's still actively managed and is not going anywhere. So we're expecting for this massive gap to be filled. Even if the market only gets back up to the momentum line of 75 bucks, that's still a recovery. Can't say that for the XIV because that one's going away. It's not going to be given an opportunity to recover. It's not going to recover. But the SVXY stands a good chance to recover. I'm anticipating that a lot of money is going to flow into this. All the money from the XIV is going to flow over here. So we'll see. I could be wrong, but you never know. All right, so I was right about the Dow, and I told you what the bar is going to look like. I drew it on the chart for you, and that's what happened. All right, and we know what's going on with the volatility shares. There you have it. All right, so if you take a look at the NASDAQ 100 futures, let's peep that on the daily chart. Here you go. All right, recovery, and here we are. Market's ready to keep rip-roaring, and I anticipate that the old highs are only going to be there for maybe another week or two, and then they're out of there. And this thing is going to 8,000. All right. What else? People did ask me to look at some stuff. Let me recall what they wanted me to look at so we can pull it up so that we don't waste time and this won't be a long video because I'm tired. I've had a long day and I just want to chill, folks. Is it, I just want to chill. Sometimes you just want to sit back and relax and chill. All right, so what did they want me to look at? It was something. And I can't recall now what it was that the folks wanted me to look at. Let's see. Okay, I do recall one of them. All right. We just covered the SVXY and XIV. That was one of them. Okay, I remember now. All right, they wanted me to look at IBM. All right, here's IBM. All right, as you can see, it got smoked too, and now it's poked its head back above the Kumo cloud, and look, it has mad rampage coming up. This should be a really good one as well. All right, so I like that one. Let's see, I like that one to the long side. Let's see what else. Haven't looked at JNUG in a while. Let's pull up JNUG. Let's see what JNUG's doing. Oh boy. Yeah, it's just coming down. It's just in a downward spiral. It's falling off a cliff. It's accelerating to the downside. Poor JNUG. GDX. See, getting caught up in the vortex. Remember, I talked to you guys about that last night. Talk to you about these vortexes right here. It's getting sucked. It's getting pulled down. Maybe it can get some enough buying strength and pull itself out. But not right now. It's looking like it's being pulled into that vortex. The time frame on the vortex is critical, folks. And that's what's happening. The vortex can really jam you up if you are not careful. It can really jam you up. That's why the markets only have particular time frames that they can escape the vortex. All right. Here, the market could have really lifted up if it could have rallied enough and broke through here. It would have been great. But the date to do it came and went. It was the week of July 31st. It didn't do it. So what happened? It tried to do something after the fact. We know it wasn't going to last. The market collapses. It's just doing what it's supposed to do. So GDXJ is still in the situation that it's in. All right, let's see here. Here's the US dollar index. All right, still in recovery mode on the weekly. On the daily chart here in the bottom of corner, the left-hand corner. Probably can't see it, but it's right there at that trend line. Excuse me, at that $90 handle. Probably will push through it. Maybe get as high as 91. Like I said, it's going to stay at between 90 and 91 for the foreseeable future. I just don't see it going anywhere other than that. All right, I could be wrong if we close above $90.13 this week. So we'll see what happens on the US dollar index. All right, on the bonds, Here you go. Same thing. It wants to maintain a bullish stance, but it's going to need to close above the 148.04. All right, so that's pretty much it on that. Here's gold. I'd be remiss if I didn't show you the gold and silver chart. You can say, hey, you didn't show the chart. See, it's starting to lose that momentum. That's what I was afraid of in last night's video. See? So it could come down and correct and get down to the trend lines. It should be saved because you got enough of a rampage coming up to prop the prices up to stay above 1300. So we should be okay. It should be able to survive a pullback. We'll see. That'll be a really good test of the strength of this market. With silver, all right, silver still in the Kumo cloud of death, moving sideways. Remember I showed you got the vortex opportunity coming up here. All right, first or second week in April. Then you got this little window right here, the week of May the 7th and the week of May 14th, that could pull prices lower if prices are not trading above that when we get there. So it's showing some promise. It's not really collapsing. It's just maintaining its price action. It's trading between that $16.50, $17 range. So it's like a 50-cent range that they're trading in. And really, top side on this was 1770, and we hit a low of 1651. So yeah, all right. So you got about $1.20. So you got a $1.20 range that it's kind of staying within. So as long as it stays within that range, you're good. You don't want to see price action drop below this cloud. So we'll see what happens, man. I mean, can it gain momentum and just take off? Of course it can. But in order to do that, this week is going to need to close above $16.92. Shouldn't be that difficult. We're within that trading range right now. We'll see what happens. What else? There was something else I was going to show you, and I can't recall. That's what happens when you get tired and you work real hard. Oh boy. Oh, the bears are coming out of the woodworks, all right? And the collapse people, oh, I told you the world's going to collapse. The world is coming to an end. The market is over. The stock market is about to crash, the smash, the splash, the bash. It's all trash. Ignore it. All right? These are gingerbread analysts. All right? Their analysis crumbles along with their accounts. You can't fight the tape. Do you see anything bearish on this chart? I'll wait. Give you a few moments to look it over. Do you see a bear market on these charts? No. No, no, and no. Do you see anything giving off an alarm bell for a sell signal saying, get the heck out of the market and go all in cash? Nope. You see a healthy pullback within a bull market trend. Do you see any crosses on these trend lines? I'll wait. Do you see a cross on the trend lines? Nope. You don't. Until the weekly chart turns, you should be looking for buying opportunities, folks. Buying opportunities. Buying opportunities. All right? Or you sit on the sidelines until you can get triggered until the market is truly broken out of this downtrend retracement pattern. That's it. But selling and lining up large sell tickets to sell short the market and buying puts and getting long inverse ETFs, all right, go ahead with your bad self. Go on. Go on now. But don't take me with you. You on your own. I'll follow the pulse waves. Thank you very much. So here you are. I'll tell you what's going to be happening. People are going to start getting long this stock here, IBM, taking advantage of these pullback opportunities. Even though it's outside of the cloud right now, it's lost its momentum. Trust me, they're going to wait to get back in when it gets top side here. If it catches on the momentum side, unlike here, they're going to be all in. Same thing with NVIDIA. All right. You see how it just ran up? This thing is now crossed back over. It's above its momentum line, opening up the door for more bullish activity. All right. Here's your Facebook. All right. It's back above its momentum line. All right. Here's your Amazon. Where's your pullback in Amazon? It doesn't exist. It's in a bullish stance, ready to break out above 1500. Apple. Here's your Apple. It lost its momentum, but it's starting to creep back up. Wants to regain it, and it wants to get and break that 200. All right, Netflix. Here we go. Way above the momentum line, and it's ready to rock and roll. It wants to break 300. Oh boy. Let's get back here. Let's look at Alphabet, i.e. Google. Also, getting back up toward that momentum line of 1105 and 48. If it does it, then it's ready to reverse and get off to the races too. You got mad rampage coming up, folks. You got rampage, which should compel prices above the $1,080 mark. And that's exactly where it is now. And I think this is the new floor for the base for the next rally to get this thing up to the $1,200 mark. Any questions? I'm just saying, folks, follow the price action. Even if everything I just told you is total BS, everything I just showed you. Let's say something happens, some report comes out or some information or news, and the market just goes, ugh, and gives up the ghost. Of course, anything is possible, folks. All right, of course. If that happens, then we will have no choice but to become bears. But the trend is not broken. It's not broken. If it ain't broke, don't fix it. All right? You're talking about shoulda, woulda, coulda. What may be, what might be, what could be. Forget all that. Let's trade what is. What is right now is a bull market. Like it, lump it, or leave it. Postwavetrading.com. Come learn how to trade these markets. Learn how to put the power of the algorithms in your hands. Run other people's stops. Don't let them run your stops. Postwavetrading.com. And remember, bulls make money, bears make money, and pigs get slaughtered. So remember to take what you can and give nothing back. Peace.